Hello, everybody. Welcome back to Tips for Mortgages. Mike Parkinson, mortgage broker with Dominion Lending Centers in BC, joined by my cousin Jaden Bax with Avenue Financial out in Crossfield, Alberta. Lots to talk about, Jay, today. Big day from the Bank of Canada. Kind of caught us off guard when I turned my phone on this morning. I wasn't really expecting the a quarter point rate hike. I honestly believe that they were going to just stay put and see what happened. But apparently the numbers, I guess, were coming in. They're too strong, all their indicators, and they figure that the economy's running too hot and inflation's not coming down to where they wanted to. So they, I guess, made a statement today, and we're going to see what happens moving forward. So they've jumped their overnight rate to 4.75%. Inflation ticked up 0.1, I think, CPI in April there to 4.4, and they weren't happy with that. So, let's have a chat about this. What are your thoughts?
Yeah, well, I think there's a couple of different numbers. I didn't like the GDP growth for the first quarter as well. There's a bunch of stuff there. My thoughts are that Tiff Macklem sees that the rate hikes are filtering through the economy, and he sees what's happening, but he also sees that people are continuing to spend in spite of all of that, in spite of some of the weaknesses that we're seeing in terms of an increase in people applying for EI and jobs being filled because people are actually working two jobs because they can't afford what's out there right now and things like that. So it's been what I think happened today was Tiff Macklem saying to the economy, settle down and trying to give a little scare to everybody. We know how this is going to play out, excuse me, through the media. All of a sudden, we're going to be talking about more rate hikes through 2023 and maybe staying high through 2024. I continue to believe that the best deal out there is a 1 or 2 year fix. The variable, that 5-year variable, it's pretty scary today, but there's still some upside there. But I really just feel that Macklem knows that the impact of this in terms of how that actual rate hike impacts the economy is never going to be felt because we're going to be hitting a recession and they're going to be dragging rates back down. This was more about sending a message and trying to scare people out there a little bit more to spend less because things keep going up, right?
Well, like you hit the nail on the head there with the fact that they are not going to slow down until people stop spending. As long as we keep plugging away and the markets are doing okay and people keep surviving and keep spending money, nothing's going to change. I don't think they're going to even slow down or start to even think about a rate cut until something breaks. And that's my theory. I think they're going to just keep plugging away until something breaks. They want more people to be unemployed. They want that to increase. It's an interesting world. It looks like from some of the analysts we follow that they believe that the U.S. is in a recession already. And you mentioned Germany as well. Other parts of the world. And let's look at some other indicators over the world. Like let's look at the Saudi Arabia and OPEC cutting back oil production. Like that's a huge indicator. They obviously see a slowing in demand, right? So they know that things are slowing down. So why would they cut oil production that much, right? So we need oil. Oil touches everything, right? So oil is basically the economy.
But they've committed to that for 1 month, right, Mike? Like that's not a long term.
Yes.
But they see the cracks there. They want and like Alberta's depending on it, that $75 barrel of oil at least, right? And then they're pushing towards that. What happened with oil? It creeped up a tiny bit after that. It's that oil price, like you say, oil is the economy, and you can see that it's still going down. I think this announcement from the Saudis from OPEC Plus had kind of a minimal impact to what you would have thought it would have. But that's probably because they're doing it for a month, and they're doing the same kind of thing that Macklem is doing. Macklem's trying to scare the economy down. They're trying to scare that up a little bit in the short term, right? So
other indicators out there, like if you look at the ISM, the manufacturing index, it's dropping like crazy, right? Because the demand is over the world is slowed right down. So we'll really see where things are heading. And many recessions have actually started with unemployment as low as it is. So
Yep.
unemployment, housing, it's the lag effect. It's the final straw right on the camel's back. It takes the longest to come through the system. And we're just
Yep.
starting to kind of hit that 15-month window now with interest rates when they started moving up here last year. So again, it's just a time thing. It's like everybody keeps saying, when are we going to be in a recession? Are we going to have a recession? Are we going to have a recession? Well, you can sit back here and just think, oh my God, are we really not going to have a recession if you follow the narrative, right? But if you look at the numbers, you look at the math, the debt out there, how much interest rates gone up, like this much, this fast, it just doesn't make sense, does it, Jay?
Yeah. No, absolutely. And so in the short term, what does that mean? We saw bond market shoot up this morning,
Yeah,
shoot up in a significant way, and so the bond market means that your fixed rates are probably coming up over the next little bit here, and they have been creeping up the last
yes, they
couple of
have.
weeks. We were looking at just 2 weeks ago, we were looking at on the insured side, so that's less than 20% down. We were looking at a 5-year 4.34. And we were still saying to our clients, like, that's great in the market, great to what we've been looking at lately. But that's not a great 5-year. Well, now that 4.34 is about a 4.84, and could creep up a little bit closer to 5 yet, right?
Yeah,
So
some are over
um,
five, actually. So yeah,
yeah. So you can really expect to see, in the short term, fixed rates probably going to bump up a little bit, and really, I don't think we're going to see any kind of resolution on that until the next rate announcement this year, eh, Mike?
what do you think about what some of the forecasts are now, and the economists saying that possible rate hike in July here,
Yeah,
and
but it's funny because
more hikes coming up.
those same economists
Crazy.
are they're crazy, and I think in spite of everything, like I don't think either you or I are the biggest Macklin fan. Went I think in the end it's going to be shown that he went too high. I think he started too slow. A lot of different things, but I think now he sees what's going on behind the scenes, and because he knows at this point a quarter point hike isn't making any impact. It's just putting the fear of God into people a little bit.
Well, and to be fair, he's just doing his job because inflation, their inflation, the numbers they come by,
Yeah,
ticked up. So he's got to try to bring that down and cause pain. But it's funny that he's trying to help people in the end. But in the end, what's really going to help people with all this debt, with these high rates? When they end up start cutting rates, we just don't know when and how much. And if they ever start printing again, that's kind of inflationary as well. So there's all kinds of things. I'm not sure how it is out there, Jay, but the real estate out here in the last week or two has kind of slowed down some.
yep,
We're having a good run there for a bit. I think people are a little bit nervous. What's happened today has really affected. Mostly, it's just people with variable rate mortgages, with secured lines of credit, people with lines of credit. And what really affects people is people coming up for renewal right now on their
yeah,
mortgages. I've noticed that a lot. A lot of these people are at 2.5 to 3.5%, and now they're trying to figure out what to do. Like, oh my God, when I come up for renewal here, my payments are going to go up a lot, because that's reality, right? When you start moving up
yep,
and you double the interest rate, your payments are their payments aren't going to double, but they're going to move up for sure.
yep.
So strategies there to chat with us about, and if you're really concerned about it, please give us a call anytime. We're happy to chat with you guys. We still think, our predictions, and we don't have a crystal ball, is that, a year from now, things are going to look different. And I'd be very surprised if these rates happen to stay high all through next year. I just don't see how it can happen. But we'll keep plugging away and giving you updates, and we look forward to chatting with you guys next week. Again, call us anytime, me in BC or
Yep.
Jade in Alberta, and we're happy to help you guys out. So have a good day, Jay.
Yeah, you too, buddy.